Hello, everyone. Thank you for joining us today. My name is Robby Dunn from Consumer Credit Counseling Service of Buffalo, and I will be presenting on a workshop here today, Protecting Your Financial Health During the COVID-19 Pandemic. For those that aren't too familiar with our organization, Consumer Credit Counseling Service of Buffalo, we are a nonprofit locally based here in Western New York. With the mission of helping individuals with their personal finances. We offer services ranging from credit report education to financial coaching, budget coaching, and really assisting folks with their financial goals pertaining to resolving debt, credit card debt, finding student loan repayment options that are more beneficial, as well as we offer housing counseling services, assisting with pre-purchase counseling, as well as delinquent mortgage counseling. So without further ado, we will get to our presentation today, Protecting Your Financial Health During the COVID-19 Pandemic. Just to get started, we will touch here on the CARES Act. So a few of the items we'll be mentioning today are in relation to the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act, which was signed into law on March 27th, providing various consumer protections, various benefits, and relief options during this crisis. First, as most of you probably know, there was the economic impact payments, or the stimulus check, which was released beginning in April. So many people have received their likely $1,200 for single individuals, or potentially more based on the amount of dependents within the household. Tax filers with an AGI, adjusted gross income, up to $75,000. And couples up to $150,000 will receive $1,200 each. Tax filers with dependents will receive $500 for each dependent claimed. Single filers with income over $99,000 are not eligible, as well as household filers, head of household filers, and joint filers with a total income of $198,000 with no children are not eligible. Important here, if you filed your 2019 tax return, the IRS will use this information to calculate and send the payment out. If you did not file your 2019 tax return, they will use the 2018 data. Just a reminder here that the tax filing date for this year, for the 2019 tax year, has been extended to July 15th. And this would also be when you need to file and make any payments if you owe taxes this year. A little bit more here on the economic impact payments. If you are not required to file a tax return, the IRS will use the information on the form SSA 1099 or form RRB 1099. This includes for senior citizens and Social Security recipients. Other low-income workers or people with no income can use the non-filers enter payment info here tool on the IRS's website in order to receive their economic impact payment. You will not pay income tax on your payment. So this is a common question that's being asked by a lot of people. So it will not reduce your refund next year, or will not increase the amount you owe when you file your 2020 federal income tax return. Also, it will not affect your income for the purposes of determining eligibility for other federal government assistance or benefit programs. So this could be SNAP benefits, food assistance. This could be Section 8 housing vouchers. So this will not affect your income qualifications for those programs. Lastly here, the IRS has a Get My Payment tool, so you can check the status of your payment on the IRS website. We have the link for that here within the presentation slide. All right, now getting to making the most of your stimulus check. So of course, $1,200 can be a nice windfall for many people to come in. Many are needing it, of course, to close the gap at this time. Of course, if you lost your job or you've experienced a reduce in income, this may not be a huge help, but there is some ways that we advise on how to best spend it and invest it at this time to benefit your household. So first here, sort of a checklist to run through to see how you can best spend your payment. So if needed, of course, to use it for any essential expenses that are related to your basic needs. So housing, utilities, of course, food, or any important household items or medicines that are needed at this time. There may be some things that you want to stock up on so that you feel comfortable and safe during this pandemic. So that would be, of course, a great way to spend the money on necessary basic expenses. If you're currently able to afford all of these basic expenses, perhaps considering starting an emergency savings fund, or if you already have a savings account, to contribute fill up your savings account. It's always good to have as much as you can in your emergency savings. Oftentimes you'll hear advice from financial experts that we should have somewhere between 6 to 12 months of our household expenses and savings. That's quite a lofty goal, and that might not be reasonable for everybody or possible for everybody. Maybe you feel like you need a few $1,000s to take care of basic housing repairs, auto repairs, medical expenses, etc. So next year, if you have sufficient savings, perhaps consider paying down on any high interest debt, particularly any outstanding credit card balances. Usually credit card balances come with the higher interest rates. Not always the case, but the national average interest rate on credit cards right now is roughly about 17%. So paying down on this debt can be a very effective way to, of course, eliminate the debt, and can be a wise way to spend the funds. Lastly, consider using the payment to fund a retirement plan or health savings account if you're eligible. So if you have sufficient savings, if you don't have any debt or have a minimal amount of debt, perhaps consider using the funds to invest in the future in accounts where it can gain interest or provide other tax benefits. All right, next here, moving on to unemployment insurance. So there was some added benefits through the CARES Act. Of course, over 30 million Americans, unfortunately, have filed unemployment claims, and there may be many other individuals that may qualify for unemployment insurance benefits that have yet to claim, maybe because of some of the barriers and difficulty logging on to the systems, as many of us have probably heard about. So if you are filing a new claim, you can apply online at unemployment.labor.newyork.gov for New York residents. For anybody else listening, you would want to check with, of course, your local State Department. What you may qualify to receive: 39 weeks of unemployment insurance benefits. Traditionally, it's 26 weeks, but given the state of the pandemic, it was extended to 39 weeks of benefits. Also, you may receive an additional $600 a week provided by the federal government, and this is until July 31st. If you are already approved for unemployment insurance benefits, you will not want to do anything except continue to certify weekly, and your benefits will be updated automatically. Here we have a resource, a referral. This is the Empire Justice Civil Legal Services Law Firm, Unemployment and Paid Leave Legal Help Line. The phone number there, 1-800-724-0490, extension 5827. So this is a organization that can help with people navigating unemployment claims and some of the hurdles and difficulties that people have gone through. So definitely suggest this if you or anybody you know is coming across hurdles or barriers in applying for unemployment insurance benefits. So if you are not traditionally eligible for unemployment insurance benefits, what you should do. Check your eligibility for the pandemic unemployment assistance. This is providing payment to workers not traditionally eligible for unemployment benefits. So this could be self-employed individuals, independent contractors, workers with limited work history. The benefit rate is based on your recent wages. So for New York State, the maximum is $504. And also there is a new streamlined application for New Yorkers and perhaps other states to apply for the pandemic unemployment assistance without having to first apply for the unemployment insurance. So essentially you can apply for both at the same time. Once again, what you may qualify to receive: 39 weeks of PUA benefits, that's the pandemic unemployment assistance benefits, an additional $600 a week until July 31st of 2020. So this would be $600 a week on top of what the state would provide, which the maximum amount in New York State, once again, is $504 a week. Payments began on April 5th, 2020, and also the 1 week waiting period has been waived. Moving on here to SNAP and HEAP benefits. So just a reminder here of, and this is not related to the CARES Act. There's one small change with some emergency allotments that were provided under the Families First Coronavirus Response Act. So to apply for SNAP and HEAP online, there is the website there, the link to mybenefits.newyork.gov. As mentioned, emergency allotments, a one-time benefit will be issued automatically to those eligible for SNAP households or SNAP benefits that do not normally receive the maximum household amount based on the household size for March or April. So oftentimes many SNAP household recipients do not receive the full maximum amount based on their income. With these allotments, this will allow them to receive that full amount based on their household size. You can also contact your local Department of Social Services to request a paper application. All in-person appointments have been canceled at this time. All right, moving on here to the CARES Act on the debt side. So some of the relief options that are available pertaining to certain debts, student loans, mortgages, and we'll talk about some potential relief options with auto loans, credit cards, and bank accounts. All right, so right to student loans. So for with the CARES Act, there is an automatic suspension of principal and interest payments on federally held student loans through September 30th. This began in March, so roughly about 6 months of suspension of this principal and interest payments. Suspended payments will count towards any student loan forgiveness program. So some of these forgiveness programs require a certain payment each month. In this case, if you make a $0 payment because your payments are suspended at this time, that would count towards your forgiveness program. Borrowers do not need to take any action to suspend payments. So if you were to log into your servicer's website, you would see that no payment is due at this time. You, of course, can opt to make payment, and that would be a good thing, as that would pay more down on your principal, and you could put a larger dent in your student loans at this time. But as a reminder, no payment is required. Some federal student loans under the federal family education loans, so these are FFEL loans, or are owned by commercial lenders, and some Perkins loans that are held by the institution you attended. So with these loans are not eligible for the benefit at this time. This benefit does not apply to private loans. So these are non-federal student loans that are owned by banks, credit unions, schools, or other private entities. So you certainly want to double check, make sure what type of student loans you hold. Sometimes it can be a bit confusing. You'll want to make sure that if you are seeking not making payments at this time, that your loans are in fact federally held student loans. Interest will not accrue on your federally held loans while your payments are suspended. For all other federal student loans, the interest will continue to accrue. So this would be the FFEL loans, Perkins loans, and of course, private loans. The Department of Education has stopped the collection of defaulted federally owned loans, including garnishment of wages, the offset of tax refunds, and Social Security benefits. Once again, this is something that you'll want to check on and make sure that if your loans were in garnishment or your tax refund was set to be taken, to double check. There have been stories of people's wages continuing to be garnished. With the many millions of people affected by this, there have, of course, been mistakes and errors, and garnishment has been continued for some folks, reportedly. All right, student loan relief for New York State residents. So student loan borrowers experiencing financial hardship due to COVID-19 can obtain relief for loans not covered by the CARES Act. Available relief includes 90 days of deferred monthly payments, waived late fees, no negative reporting to credit agencies, and enrolling eligible borrowers in available long-term assistance programs. If you are having difficulty with a student-related financial product or service, you may file a complaint with the Department of Financial Services or contact their consumer hotline at 1-800-342-3736. Moving on to mortgages. So, of course, a large concern here for many households, managing paying their mortgage during this time for those that have experienced a reduction or loss of income. So first advice here, if you can pay your mortgage, continue to pay your mortgage. If you have the ability to do so, you do not want to put your mortgage at risk or your home at risk. If you cannot, there are options under the CARES Act for federally backed mortgage loans, FHA insured loans, VA loans, and loans from Fannie Mae and Freddie Mac. So these options may include forbearance. A borrower must affirm they are experiencing financial hardship, and the forbearance period is 180 days, and upon request can be extended for an additional 180 days. So during this time, under a forbearance, payment would not be made. There will be no fees, penalties, or interest beyond the amount scheduled during the forbearance time. Also, a moratorium on no new foreclosures may be initiated, and pending foreclosures may not be executed at this time. And credit reporting. Deferrals or forbearance agreements due to COVID-19 must be reported as current as long as the accounts were not delinquent prior to enrolling in the forbearance. Big advice here is to make sure you contact your servicer and ask what options may be available to you due to your financial hardship related to COVID-19. So every servicer has different procedures, process, and available options. So you'll want to contact your servicer and ask them some of these questions to see what they may have to offer. So a few questions here. Do you offer a forbearance hardship program? What kind of documentation will I need to submit? Will you owe the entire unpaid amount in a lump sum once the forbearance is over, or at the end of the loan term? So this is a large concern of many people, that if they were to get their mortgage put in forbearance and payment delayed or payment not required for, let's say, 6 months, at the end of the forbearance, will they need to make a full 6 months lump sum payment? That may be the case for some individuals, and you'll want to see for sure if that is going to be the expectation, or if you need to explore looking into other repayment options. One being here, can the loan term be extended so payments not made are added to the end of the loan, and will remaining loan payments be higher to make up for the deferred payments going forward. You certainly want to understand and agree to all the details that you enter into with your servicer. Make sure that you ask for written documentation of the terms of the agreement. What if my mortgage is not backed by the government? So as we mentioned there on some of the options we talked about, federally backed mortgages, FHA, VA loans, and here we are looking at conventional loans. What kind of options might be available? So the New York State Department of Financial Services has required New York regulated banking organizations to forbear mortgage payments for 90 days for borrowers impacted by COVID-19. Once again, for any folks listening that are not New York State residents, be sure to check with your local state office. In short, if you are struggling with your mortgage payment, reach out to your servicer. They most likely will have options for you to explore, and be prepared with documentation, your household budget, income information, so that you can best explore options. Also consider talking to a housing counselor for advice on your options and resources at no cost. Make sure they are a HUD counseling agency. Moving on to auto loans and credit cards, bank accounts. So some of the potential relief options. Once again, here you'll want to contact your financial institution or lender to explore your options if you are struggling to make payment on your auto loans or credit cards or any other financial loans directly held by a bank. So with auto loans, some lenders may be offering deferred payments or payment extensions at this time, potentially changes in your due date. Might not be of huge help, but this could help to restructure your budget and your due dates throughout the month so you can evenly disperse some of your expenses or prioritize your due dates. They may be offering waived late fees at this time as well. With credit cards, bank accounts, some institutions are offering waived overdraft fees, as well deferred payments or lower monthly payments temporarily, and late fees for credit card and other loan balances waived. In addition, ATM fees waived and perhaps increased daily cash withdrawal amounts. All right, moving on to protecting your credit. During this time, of course, your credit report, your credit score could be impacted by the inability to make payment on various expenses. So protecting your credit during this time can be a challenge, but is ever important. So if you can't meet a payment obligation, of course, reach out to your lender. And if they agree to any payment plan, make sure to get it in writing and confirm that they will not be reporting any late payments to your credit reports at this time and doing any negative damage. So under the CARES Act, lenders are required to report your account in certain ways if they make an alternative payment agreement with the consumer. If your account is current and you make a modified payment agreement, your account should be reported as current. However, you must meet the terms of the agreement. If your account is already delinquent and you make an agreement, then your account will maintain that status until you bring that account current. So if you were currently 2 months behind and you got into a modified payment agreement where you were going to have a reduced payment, or you're going to have a reduced monthly payment at this time, if you do make that payment, your account would continue to stay or report 2 months behind to the credit reporting agencies. Lastly, if your account is already delinquent and you make an agreement and then you bring your account current, the creditor must report that you are current on your loan or account. Of course, here, checking your credit reports, the most important thing that you can always do to protect your credit, monitor your credit, is to receive a copy of your credit reports from all three of the credit bureaus. This would be Equifax, TransUnion, and Experian through annualcreditreport.com. This was created through government legislation in mid-2000, providing all Americans the ability to obtain our credit reports once from each bureau every year. Now, all three credit bureaus are now offering free weekly online reports through April 2021. So you can pull your own credit report. This does not negatively impact your credit score. This is a common myth that I have heard with credit reports and credit scoring, that when you pull your own credit report, you are doing negative damage to your credit score. That is not the case. When you do apply for credit, or you fill out a loan application for a credit card or an auto loan or a mortgage, that will be counted as a hard inquiry and will negatively impact your credit score. Here also, you'll want to dispute any inaccurate information. So when you pull your credit reports, if you see any misinformation or errors or inaccuracies, you can dispute that online or with a letter as well. Importance of maintaining good credit. So how does your credit score affect you? So we'll just talk about how credit score affects you and how your credit score is calculated here just for a few minutes. So the ability to obtain credit, of course, your credit score directly impacts that, whether you receive something or simply get declined. Next, your interest rates. You can receive potentially a loan, let's say an auto loan, with a poor or fair credit score. This may result in a higher interest rate or a higher cost to borrow that money. Apartment rentals, simply renting an apartment can be impacted by your credit score. Of course, a big one here, home ownership, mortgage approval. A key thing in qualifying for a mortgage is your credit score and your credit report. Typically, you need at least a minimum credit score of 580 for a FHA mortgage, and perhaps even higher required by the specific bank or lending institution. Usually you're looking at a minimum of 620 to 640 credit score. Also, your utility services can be impacted by your credit score, the cost that you pay for various insurances, and employment. Many employers check credit reports during the hiring process, and this could be impacted in their hiring decision. So try to the best of your ability to not let this crisis impact your credit, your future financial goals. It may already be impacting your current state, but by taking advantage of some of these options available, by contacting your lenders, your servicers, hopefully we can minimize the damage to one's credit report, credit score, thus not impacting any future financial goals. Here's just a pie chart of what makes up your credit score. So briefly here, 35% of your credit score is your payment history. This year, you want to make sure, of course, your bills are paid on time. Anything that reports to the credit reporting agencies, your mortgage, auto loans, student loans, credit cards, making sure that you are not falling behind more than 30 days. Typically, after 30 days is when creditors will report to the credit reporting agencies or credit bureaus that late payment, and that's when the negative impact will occur. Next here is 30% of your credit score is your current total debt. In specific here, this is your credit utilization ratio, really how much of your available credit limit are you using on your revolving credit, which is credit cards. So you want to make sure to only use about 30% of your available credit limit. The lower the better. Next, 15% length of credit history. So how old are your accounts? In specific, again, to revolving credit, credit cards. The longer that your accounts are open, the better, showing that longevity in maintaining an open account, paying on your accounts. So typically here, advice is you do not want to close down any open credit cards, even if you're not using them. Keep them open or consider keeping them open unless maybe there's a large annual fee that you no longer want to pay or cannot afford. Of course, you may want to consider closing it down. But anytime you close down an open credit card, you may be impacting the length of credit history of your accounts and negatively impacting your credit score. The last two here, the requests for new credit and types of credit in use, each make up about 10% of your credit score. Requests for new credit is your inquiries. So these are your attempts to take on debt, take on credit. And types of credit in use, it's best here to have a healthy mix of credit. So where you have installment debt, which is a piece of debt like a mortgage or an auto loan where there's a set time period that you're going to pay. Either it's a 15-year mortgage or a 30-year mortgage. This would be installment debt. And then there's revolving debt, which is a credit card debt. So for your credit report, it's only worth 10%, but it is good to have a mix of these various types of debt. Some steps to take if you can't meet your financial obligations. We've touched on this, but when you do contact your lenders, you want to be prepared to explain your situation in detail, how much you can afford to pay, and when you're likely to be able to restart your regular payments. If this is something you know, perhaps you know that you've been furloughed for 3 months or 6 months, or you're experiencing a temporary reduction of income. You may be able to explain that you need 3 months or 6 months of assistance or relief, and then you'll be able to restart your regular payments. In the cases of mortgage, ever more important, be prepared to discuss your income, your expenses, and your assets so that you can explore the best options available. Preparing an emergency budget. Of course, this may be a great time to review your budget, prepare an emergency budget, or put one into place. So first step we would advise is to write down all of your household expenses. First, prioritizing your survival expenses, your basic needs at this time. So this would be, of course, food, water, shelter, any transportation or vehicle expenses, childcare, medical expenses. And then consider pausing any of your non-essentials. Also altering your food and grocery expenses, limiting any takeout during this time. Of course, we all know you can save money cooking at home. So I know more and more people are cooking at home right now. Of course, they're forced to do so. And this may be saving us money at the same time. Consider freezing or eliminating or reducing any subscriptions for streaming services, as well as any memberships or gym that you're not able to take advantage of at this time. And any electronics or gadgets, any computers, anything that's not needed right now, consider pausing, of course, purchasing any of these items if you can. Next here, to investigate any deferment options. So talk with your creditors to see if there are deferment, lower payment options during this time of hardship. We talked about this in other sections, but this can be a way to navigate during this difficult time by receiving slightly reduced payments or potentially even deferring your payments for several months so that you can maintain your household budget and get through this difficult period. Confirm that no negative information will be reported to the credit bureaus. As mentioned, making sure you get it in writing, any agreements, any alternate or modified agreements that you make with your creditors, be sure to get in writing. Note that interest will continue to accrue on many of the debts. As we talked about with federally held student loans, interest will not accrue, but with mortgages and credit cards, auto loans, if you enroll in any deferment or forbearance programs, it is likely if not certain that interest will continue to accrue. Hit pause on your goals. Not our favorite advice to give, but this might be time to step back from some of your longer term goals, specifically any financial goals, and to reallocate any funds towards emergency savings or towards any basic essential expenses at this time. And lastly, consider evaluating any automatic payments that you have set up and making sure that your most critical bills are being paid first. So if you have any credit card payments or streaming services or whatever it might be that are set up to be automatically paid, make sure to review all of those, as you don't want those funds or those specific expenses to be paid in priority over something like your mortgage or food and groceries, etc. Lastly here, scams. As we know, many scammers often take advantage of vulnerable consumers during disasters and times of financial insecurity. Some things that are going on right now, of course, in relation to the economic impact payments and stimulus, as well as vaccinations, test kits regarding COVID-19. So just some reminders here, the IRS will not send you an overpayment and make you send the money back in cash, gift cards, or through a money transfer. Do not respond to any texts or emails or calls about checks from the government. Ignore online offers for vaccinations and home test kits. And of course, do your homework when it comes to donations. So if you're considering making any donations at this time to help out any local organizations, make sure you do your due diligence and do your homework. So, oftentimes with these scams, if anything sounds too good to be true, it's usually a scam, or if you have a bad feeling or it seems a little fishy, take a step back and study it a little bit and determine whether or not you think it's a scam, and reach out to maybe a friend if you need somebody to take a second look at it, or of course a colleague or your IT department at your place of employment. This here just our resources provided for this presentation today. We'll skip through questions, but of course if you do have any questions, bring up the last slide here is a service that we are offering at Consumer Credit Counseling right now. We are offering free financial checkups where you will meet with a certified counselor by telephone to address your financial concerns and gain advice on what actions you can take now. We will provide you with any community resources and relief options that may be available. If you're struggling with your mortgage, student loan, auto loan, and credit card payments. Also, we can pull your credit report and review that as requested. And lastly, we can thoroughly review your income and your expenses and assist in reviewing or creating an emergency budget for you at this time. So there's our phone number there. You can call 712-2060. That is area code 716. We are here to help you at this time. And from everybody here at Consumer Credit Counseling, we hope you are staying well and staying safe during this difficult time. And thank you for joining us on our presentation today. And take care.